Today I will teach you one setup that includes FVG, order blocks, liquidity, inducement, everything. And I also teach you what's the relation between them and how they are interconnected. So what people do is they try to learn first market structure, then liquidity, and then order block. The thing is you have to understand everything at once, and that's why it is interconnected. So to learn market structure, you need to learn liquidity. To learn liquidity, you need to learn market structure, and so on and so on. And I will also teach you how order blocks and imbalances are created. So let's get started. Right now, the first thing is we need to look for the direction, in which direction price is going to. And how do we get direction? Just by looking at the liquidity sweep or inducement. So here we can see price swept the liquidity from this low and broke the structure to the upside. Now we know that price was going to the downside and it swept the liquidity. So there is no liquidity below this low. Liquidity is above this high. Okay, so that's why price swept the liquidity, it broke the structure to the opposite side. Assume that this chart is on 4 hour. So if you go to lower time frame over here, just by watching this video, your all doubts will be cleared, I guarantee. Okay, so for example, so price swept the liquidity from this high and broke the structure to the downside. Okay, when price breaks the structure to the downside, it creates some kind of order block over here. Okay, and what happens, because the structure is going to the upside and we know our higher time frame trend is going to the upside, that's why price retraces to this order block, and there are some sellers who are trying to sell over here. That's why price goes to the downside, and again price breaks the structure to the upside. So here, and this is how breaker block is created, and this is our block which broke the structure, which also sweep the liquidity to the downside. And now what happens, if you are trading for a while, you will notice that sometimes what happens, price gives you order block, it broke the structure to the upside, it gives a nice order block over there, and when you are finally trying to enter, price does not touch your order block and it goes to the upside. Why this happens? Because price is not chasing the order blocks, price is chasing the liquidity. So think of this like this: if price is going to the upside and there is order block, price creates this order block over here, and if price creates more liquidity to the upside, price does not have to touch this order block. Price will just sweep these lows, because it's much easier for price to sweep these lows and then go to the upside rather than mitigating this order block and completely this whole move. Okay, so that's why what happens, price will just sweep the liquidity and then it goes to the upside. So let's see over here. So now finally we have price have created this breaker block and this order block. Now price creates a new high over here. Okay, price makes a new low, so there will be kind of equal lows over here. Price will sweep the liquidity and price will break the structure, and now it's repeating the same pattern. What is happening now? Now this will be our strong low, this will be our weak low, price broke the structure to the upside. Now it will create the order block, you will enter at this order block, and this will be our next weak low. And once order block is mitigated, it becomes liquidity. So understand this: if price creates order block over here and if price goes to the upside, like price will create liquidity, it will sweep this liquidity, it will go to the upside. If price mitigates this order block and then again it goes to the upside, now it is creating a trend line liquidity over here. Okay, so there will be people who will put their stop loss below this low. Okay, again price will come to the downside, it will sweep all these lows and then it will mitigate this order block. That's why I always say, if order block is mitigated, then it becomes liquidity. And that's why price does not goes in stepwise pattern like this: high rise and high lows, high rise and high lows. Price will always sweep the liquidity and then it will create inducement and it will create imbalance over here. Now let's see how imbalance is created between this. When price induces the previous low and it breaks the structure to the upside, because there is so much force over here, when price rejects from this order block, price needs to break this high and it needs more orders and more force to break this. And that's how FVGs and order blocks are created. Now we know price sweeps the liquidity from the low, here breaker block is created, here order block is created, and when finally price breaks this high, the imbalance is created. And when order block is mitigated, it becomes liquidity. So we will use this same idea to trade at this area. Okay, inducement strong low, price reacts from this order block, that's why it becomes breaker block, and that's why we say breaker block is a failed order block. So this is our failed order block, which is breaker block, and this is our order block which broke the structure and sweep the liquidity. And that's why we have this inducement, this breaker block, and this order block is created. And when price breaks this structure, here order block is created, here imbalance is created, or we can say FVG is created. And this is our strong low, price broke the structure to the upside. This is our weak high, price broke the structure This is our weak high. This is our strong low. You can enter over here. Stop loss will be below this low. Next high target again. And we know that now this order block is mitigated. So we don't have to enter at this order block again until unless price does not give us new inducement or new strong low over here. So this is our liquidity. We'll wait for price to react from this order block, from this breaker block or this order block. Once price taps this order block and it gives a change of character, now we can look for buy side entry at this area, and stop loss will be below this low, and this will be our next high. Now let's use this analogy to enter in the markets. Let's see. So here we can see price swept the previous low. In this, just by looking at the candlesticks, if this candle opens here and closes below this, like this candle swept out this previous low and broke the structure to the upside. So this means this is our order block, right? So we can use this candle or this candle to mark as order block. Price came, swept this liquidity, broke the structure to the upside. So which was this candle? This candle swept out all these lows and broke the structure to the upside. So now we have this order block, right? Price came, tapped at this order block, and because this order block was mitigated and there was no liquidity, right? Price went to the upside. It did not give us any kind of structure, right? That's why price swept these lows. It became a trend line liquidity. Here we can see this is also mitigated. Now let's see over here. We will use the same analogy. Price swept the liquidity from this low, broke the structure. So this is our candle which swept the liquidity. So we can use this as our POI. And now I'll teach you how to catch every move. Okay. Price broke the structure to the upside. It created order block over here. Okay. We can see there is a slight imbalance. Like there is a slight FVG over here. Now this FVG, it swept the liquidity from these lows, broke the structure to the upside. Price came. So you can enter over here and stop loss will be below this low. Next high will be your target. And now we know that this structure is mitigated, then it becomes liquidity. So price again comes to the downside and it taps our order block, right? It taps our order block. And now we know that price started to take liquidity from this area. So if you go to 4 hour, we can see this is our candle which swept out all these lows. That's why we'll use this whole thing as POI. But let me tell you the interesting over here. Also, we can see price created order block. And as I said, price does not need to mitigate the order block. It will create the liquidity and it will sweep and then it will start to go up. It's much easier for price to create liquidity and sweep that liquidity instead of tapping our order block. So price created this equal lows. Okay, equal lows, like price created this liquidity. It came into our POI, swept this liquidity and broke structure. Okay, now we don't need to enter at this area. We'll wait for confirmation. So what is the confirmation? This liquidity sweep and this breakout structure, and this will be your entry. If you go to 5 minutes, there will be some kind of order block there here. So on 5 minutes, we can see there is this order block which took out this liquidity and broke the structure to the upside. Now same thing repeating over and over. Order block, if you go to 1 minute, you will find multiple entries on 1 minute. Okay, we are on 2 minutes. We don't have enough data. Okay, let's see. So this candle, there is imbalance. Okay, there is imbalance between this candle and price started to take liquidity from this area. So this area is important, and this is our order block here which swept out the previous candle. Okay, so you don't have to take all these entries, but I'm just explaining you the logic behind this. Okay, because we know that this order block is mitigated, this order block is mitigated, it becomes liquidity. Okay, and now we know that this order block is mitigated, it becomes liquidity. If you want to trade this, you can trade, enter here, stop loss below this low. Next high will be our target. Again, price swept the liquidity, it started to go up. Now we have to wait for next move. Okay, here we can see because price created this high, it swept all this liquidity. Okay, so you could have entered over here again because price created this order block, and now price created this order block. We know that overall direction is going to the upside, but still price have to respect that order block, and eventually there will be a lot of orders to break this area, and that's why imbalance and FVG is created. You can see there is not a single red candle, all these green candles. So price pushes to the downside and then it breaks to the upside. So this is our entry. Okay, here again same thing. What is happening? Price, this order block is mitigated, it becomes liquidity. So now we have this liquidity to enter over here. Again price, if you see over here, this order block is mitigated to this area. So price started to sweep this liquidity. It swept the liquidity from this. It started to go down, broke the structure. So you could have entered again at this area, capture this whole move to the upside. And similarly, if this order block is mitigated, price creates liquidity, right? Also, if this order block is mitigated, it also creates liquidity to the upside. Don't forget this. Okay. So again, this move we can capture to the upside. And now we know that because this area is now mitigated, it becomes liquidity. And this area is mitigated. Now we know that this becomes liquidity. So there are high chances that price can now come to the downside. Okay. Still, this order block, there is imbalance. And wait for confirmation. If price goes to the upside, if price breaks the previous structure, then you can also trade this area to the upside. Entered here, stop loss below this low, next high. So you can trade this move to the downside, this move to the upside, this move. And now finally we know that it's all started from here and price returns to this area. So we can enter at this order block. Below stop loss will be below this low. We also have this order block where price can come in the future. Again, same thing is happening over and over again. So price started to go up, price sweep the liquidity from this high, and price started to create another structure over here. So mitigated this area, it created liquidity. If you could have entered over here, price will hit your stop loss. But in my strategy, I will wait for price to hit this area, look for a change of character, and then only I'll look for another trade. Here, same thing. This order block is created. This order block is mitigated, it becomes liquidity. Okay, we know this is liquidity, but we'll only look for trades when price breaks the previous high. Okay, in this case, price swept the liquidity over here and broke the previous high and also this high, and that's how we know that this is a good confirmation that price has swept the liquidity. If price goes to downside and it does not break the previous structure, then price can continue to downside. So for a good confirmation, we need to wait for price to break in the previous direction, and that's a good sign that it's a change of character. Okay, here we can see price swept the liquidity, okay, and also mitigate this order block. Again, price mitigate this order block and it started to go to the upside. So again, price mitigated this area, broke the structure, it created all this liquidity. We know that this every order block is mitigated, this order block is mitigated, this order block is mitigated, this order block is mitigated, every structure is mitigated. So there is no point in entering. And next time onwards, we'll be not confused where the liquidity is. When I started to learn smart money concept 5 years ago, I was very confused, like where is the liquidity. Someone used to say there is single low liquidity, someone used to say there is trend line liquidity, and it was very hard for me to understand where the actual liquidity. And this is the logic and the science behind everything, like why all these things are created. Okay, if you want to learn more in detail, then you can join my smart money course. I also offer one-on-one coaching. For that, you can message me on WhatsApp. Now we can see, because this order block is mitigated, upside order block, it creates a trend line liquidity here, and we know that price will break this area. Again, same thing, because this order block was mitigated, price swept the previous low. Here price did not sweep this whole liquidity, price only swept this low and broke the structure to the upside. And now we have imbalance over here, and this order block broke this previous structure. So this structure is mitigated, this structure is mitigated, every structure is mitigated over here. But here we have these two zones. There is all trend line liquidity. This all the order blocks are mitigated. This all order blocks are mitigated. This all order blocks are mitigated. But this order block is not mitigated. But still price chose to hit our stop loss. It's okay. Sometimes it's fine. And now we have this order block where we can look for entry. So price broke the previous structure. We have this imbalance, this order block, or FVG we can say. And all the structure to the upside was mitigated already. So this structure is mitigated. This structure is mitigated. This structure is mitigated. So we know that if price sweeps the liquidity from these lows, it has only one direction, to go to the upside. So price will target this liquidity. If price sweeps the liquidity from the bottom side, it will go to the upside. So this is how liquidity works. It will always sweep the liquidity from the low and then it will go to the upside if price is in the uptrend. Okay. And if you like this video, hit like and subscribe. If you want to learn everything in more detail, like what's the logic behind order blocks and why order blocks are created and why liquidity happens, why price sweeps the liquidity and then why it goes to the upside or downside, everything behind it, then you can message me on WhatsApp and see you in another video. Hit like and subscribe.